Are you the type of trader that has these teeny weeny little itsy bitsy wins only to have one huge loss come by and completely clean out all of that good work you've done for the whole month or even the whole year? If you're that kind of trader, the reason that happens is because you don't have a GTFO button. Now, by this time, you've probably figured out what GTFO stands for. If you haven't, it is a Get the F Out button. And every trader needs this. And what this is, it is a max dollar risk that you are willing to take on any single trade, period. Now, this is different than your just standard stop loss. Some of you might use hard stops, but for many of you traders out there, you use a mental stop, which is what I use. You have an idea or an area, you give yourself a little bit of wiggle room on a stock, but you have a certain stop loss or a stop out area. And if you trade in this game long enough, there's going to come a point, despite your best efforts to control risk, that a stock is going to get away from you. You're going to be a victim of a news event or a PR, and suddenly what seemingly looks like an innocent trade turns into a fiasco. Now, us as traders, we've got some interesting things going on in our brain, right? How many times have you been in a trade and it slipped a little ways from you, and you're like, okay, I'm going to fight it out. Then it goes a little further, and then you're like, okay, I'm going to hang in there, and then it just keeps going, and then you go from having a legitimate trade idea, right, to smoking the hopium. Now the trade has completely gotten away from you, and you're like a deer in headlights. You have no idea what you're supposed to do next. So what this GFO button does is it gives us a max dollar risk, like an eject button. So no matter what goes wrong at any given time, when you hit this dollar amount, it's a no questions asked. I don't care where the chart is. I don't care how the stock's trading. I don't care what you think about the stock or whether you think it's going to turn around. You have got to get out of the trade, because this is the protective measure. Like I said, like the ejecting chute. This is your last hope in saving your account from disaster. So that's why you need it. How do we figure out what this number is for us? Now, every trader is different, but the easy way to look at this, it's based on your wins. Like, for example, $35 or let's say $50. $50 is not a lot of money, right? I mean, that's like half a tank of gas or something. So when you say $50, it doesn't sound like a lot of money. But if you're a trader right now and your average win is only $5, then losing 50 on a trade, that's a big deal, right? Because it's going to take you 10 trades to make that money back. And that's too much. So you can't sit there and expect yourself as a trader to go through your career with I'm only going to lose one time out of every 10 trades. That's not going to happen. You have to be able to manage risk better than that. So a good benchmark, especially for those that are struggling, those that are not successful right now, is I would take an average of 5 of your average wins, and this would equal your GTFO number. Okay? That would be your GTFO number. So this would be 5, not of your last 5, because maybe you're on a really good roll right now and that's not going to be good enough. But if you've traded, you kind of know what your level is, right? You know what you normally make on a trade. I mean, if you've traded for a month, you've got that figured out. But take a handful of trades from one month and then another month and get an idea of how much do you usually win on a trade. And whatever that number is, multiply it by 5, and that's your number. And you should never lose more than that on a trade. That should be your max. So let's say that your average is a $50 win. That's normally what you win when you do win. So that gives you $250. This math is easy. If it gets any more complicated, I'm going to forget. So $250 would be the max amount that you would lose on any given trade. And of course, it goes a lot deeper than that, which we don't have time to talk about. You'll have to manage each trade and manage that risk and manage it through your position size. But what I want everybody to understand this is for that moment where what we're trying to do is keep you from blowing up your account, right? Because I know a lot of people who win an average of 50 times, right? $50, and this may be you, because it used to be me a long time ago. You win an average of $50, and then you come by and you take a $2,500 loss. And then you win a couple of more $50 trades, and then you take a 5K loss because you get really aggressive on a trade. You can't do that. You can't do that. I don't care how tight this is, but you have to have some sort of discipline here, and I think a good benchmark is 5 trades. Now, as you get more experienced and you get on a roll and you've put together a lot of successful months, I think max you can increase this number to possibly 10. But no more than 10, because what you want to be able to do here, as I said, and what the reason for this, it's to protect your account. Because every time that you lose, whatever it is that you lose, you've got to make that money back before you can profit, right? It's that easy. And what we don't want to do is get ourselves into a situation where we know in our minds, remember, it's not about what somebody else thinks is a lot of money, it's about what you think is a lot of money. So, as I said, if you're only making $50 a trade, $250 is a big loss, because you're going to need 5, 6 good winning trades to make that money back. And you're going to have to do that in a row just to break even, and then you're going to need 6 or 7 more to get ahead to 50, right? If my math I might be losing you with my math, but you see, you're going to have to put 12 winning trades together. You're starting to ask a lot of yourself. And when you think about it, it's because of this that leads to a lot of problems. Once you get down, you start getting that aggressive gene up there, right? Like, hey, I better get back in the market. I better take more risk because I got to make my money back. I was 250, now I'm 500, now I'm 1,000. Now instead of trading 100 shares, I got to get out of my comfort zone and I got to start doing 500 shares or 800 shares. That's what we don't want to do. We don't want to develop those bad habits. We want to keep our accounts clean, because all this game is, it's not about winning or losing. It's about managing your risk, right? I mean, there's traders out there, you see them, you've heard of them, that win, heck, 40 or 50% of the time. And it's such a terrible losing ratio, terrible win rate, but they're able to make a lot of money. And the only reason they can do that is because they're okay with taking little small losses, just like the losing trader takes little small gains and lets one big loss wipe them out. The professional trader takes a bunch of little small losses and waits for that one big gaining trade. And that's what we want you to do. So I hope this whiteboard lesson gave you an idea. I hope you start to use that GTFO button and it helps you make money, or not helps you make money, but helps save you money and helps get you on the path to better trading. As always, if you need help with your trading, you want to see some of our teachings, feel free to visit our live trade room. We trade every day live on screen right in front of you. Not only do you see the trades, but you learn how to find the trades and you learn how to execute. Visit thelincolnlist.com, take a 14-day free trial. Talk to you soon.